Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for May 9th, 2018. Well, yesterday was kind of interesting. We just kind of traded in a very small range, looking at the two doji candles here. We've done that for the last couple of days, just kind of treaded water. And there was seemingly a huge interest in the U.S. pulling out of the Iran agreement. But interesting enough, after the report, there was very little as far as response to the market. Now, this morning, rather surprising, you would think watching the news that pulling out of this deal was just going to be catastrophic. Markets around the world are responding higher, and currently the futures are pointing to a higher open in the market. So if the futures can continue to hold on as earnings are rolling in this morning, and economic data, of course, that's going to come out, if the futures can continue to hold on, the diamonds may break above the 50-day moving average at the open, as well as the S&P 500 may break above that 50-day moving average at the open. That would be really, really nice to see happen. Now, the question, of course, is can it hold it? We've got above it before. If we've got above it here, we got above it here, we got above it here. But so far, there's another time right there. Since February, we've tried 1, 2, 3, 4 times to get above. And at least at this point, we have not been able to hold it as support. So now the question becomes, if we pop above that, can we hold on to that support? Can we do what the Qs have done so far? Break above that 50-day moving average, hold it support, and now we're seeing some buying stepping in this morning, futures pushing just a little bit higher, and the IWM breaking above that 50-day moving average. First it held here, breaking above and continuing to look higher, with IWM now stretching itself out toward these all-time highs in the market. Pretty amazing how IWM has become the leader of this market. So with that in mind, we have some bullish price action here to deal with today. Now the question again is, getting above those important averages is one thing. Holding it as support is another. And we're going to have to watch that pretty closely. But right now we have a pretty decent pattern going on, and the market seems committed to at least popping above that. So that should relieve some of the pressures in the market here, at least for the short term. We might see we might see stocks responding nicely today with smoother patterns, as long as we don't jump into some kind of whole new political volatility or earnings volatility that would not be expected. So let's push these markets higher for a little bit. It'd be nice to have that little bit of relief. Now, one thing I want to mention is I would not expect, and I hope everyone is not expecting, as we move into this summer, that we're just going to see these markets rip higher, and we're going to completely resume what happened in 2017. I think it would be unwise at this point to expect that. As a matter of fact, what I think would just be really nice is if we just settled in above that 50-day moving average into a nice, slow, steady, bullish move, which means smaller than price actions than we experienced over here in 2017. More consolidating going on during that period. We could see a lot of that this summer. As we just kind of settle down a little bit and get rid of some of this volatility. Keep in mind that we still have some very important levels above that we have to deal with, particularly here in the Dow. Getting back above this 250,000 mark, or 250 on the diamonds, is going to be an important psychological area for the market. So If we can hold above that 50 and just slowly creep up toward that, we may have a chance of breaking back above. But just realize that that is likely to become a stumbling block, a challenging area for the market to try and break through. Taking a look at the SPY, we also have some important levels here of resistance that we're just going to have to break above. And keep in mind, the SPY has this secondary downtrend here that we still have to breach and get above. So there could be, some back and forth, a little bit of wandering around and consolidation, trying to build energy for a move. So don't be surprised to see that. Let's take a quick look at the VIX. The VIX, just really has not moved around much. It's surprising how it's just kind of stayed pat here. With this gap up this morning, we may actually see a little follow through to the downside, which means we should be able to say we've officially dropped back below this level of support, and we've held it as resistance and potentially moving lower. That is a good thing. My guess is we will come down here and at least test that 200-day moving average in the next few days if we continue to hold on to this bullishness or this bullish pattern that we're seeing this morning. So the VIX is going to help us out here a little bit, throw a little bit of volatility out the window, maybe settle things down, make it a little bit easier as we find those good stocks in a market that may be holding above its 50-day moving average. T21.22, the 4-week new high, new low ratio. You can see that we dipped back a little bit yesterday, giving us the opportunity to move up into here. Now, this is that bearish reversal zone. We come up in here and we tend to find little pullbacks. But keep in mind, we can stay up here for a while as well. So there is room to the upside to move up here. And that's hopefully where we're headed today, with just a little bit of a bullishness here and little room to move to the upside, maybe a little relief and a nice hold of that 50-day moving average would be a beautiful thing that we haven't seen since early February. So let's take a look at the economic calendar today. On the economic calendar, we have a couple of items. We have the PPI. Obviously, PPI is a big number. Right now, they're expecting, and it's kind of an inflationary number that's going to be closely watched. They're expecting that to move up by 3%. The consensus is. So staying positive, staying bullish, but not overly strong to maybe get the interest rate fears really going here. And then we have the petroleum status report. Now, oil has been very, very strong for multiple reasons. First, the potential Syrian conflict, the Iranian deal, which everyone is speculating will increase pressures on oil. And then we've seen a decline in supplies here in the oil status report. Now that number is not forecast forward, but if it continues in its trend showing that nice little steady decline in supplies, that will support those oil prices and help the market stay higher. So let's hope that continues in its current trend. We have a few other reports on here, but you can see not much of anything else to make note of as we move forward on this hump day. On the earnings calendar, however, we have a very busy day. There were over 370 companies expected to report today, and they're coming in fast and furious. I see on my economic calendar we're down to like 354 at the moment, so a bunch of earnings reports have already come in. Keep in mind that we need, as traders, we need to be checking those earnings reports. We need to find out when a company is going to report and prepare for that event so that we have a plan. We don't want to be caught by surprise on an earnings report. So make sure you're checking those reporting dates. By the way, if you use TC2000, it's fairly easy to do that. You can actually place right here on the upper band of your chart, you can place that earnings date, which is really nice to see, and helps you in planning your trades forward and looking how you're going to deal with an earnings report, how you might trade around an earnings report. So with that, everyone, hey, I want to wish you all a fantastic day. Everything is looking bullish so far this morning. Let's hold on to that. Let's start picking this back up. It'd be really nice to see all four of the indexes above the 50 and holding up there. We don't have to have a huge, spike rally in the market to have really good trading in the market. We just need a little bit of calming. We need that those bullish looks of the indexes. Just kind of a slow grinding market can produce really great trades. So hopefully we're going to move into that and reduce some of this big swings back and forth. Everyone have a fantastic day. I wish you great profits. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube and the follow me button on Facebook. Click those thumbs up buttons. Drop me a comment if you feel the video is worth it. And please always feel free to share this video with any friends and family that you might think could benefit from this information. Everyone have a great day. I wish you great profits. We'll talk to you all very soon, bright and early tomorrow morning.